Can NVIDIA make a comeback? Put simply, NVIDIA is a company that sells and manufactures artificial intelligence. All those semiconductors, all those chips that go into your automobile, into your home entertainment center, all those devices that you think you can't live without, many of them are made by NVIDIA, and the company has been one of the great success stories of the last 30 years. In terms of its stock price, NVIDIA has been one of the great success stories, except in the last 3-4 months, as you can see by the chart. In the last year, NVIDIA's shares have traded from about $150, $160 a share, all the way up to $320, $325 a share. Then with the collapse of the global stock markets, in the wake of the war between Russia and Ukraine, the stock price has redefined itself, if you want to be polite about it, down from well over $300 a share to about $168 per share right now. To buy a stock that's lost half its value can be a risky proposition. What's to say it will not drop even further? And I can't say that it will not, but I can give you some consolation if you are thinking of an investment in NVDA, because I think the fundamentals behind this company, while it's under pricing pressure, remain sound and positive for a good recovery. Let's look at what we're talking about. In a global recession, obviously demand for semiconductors, for microchips, for all the artificial intelligence devices that this company is a manufacturer of, a pioneer in developing, obviously the demand is reduced. And there's pricing pressure, and there are also supply chain issues where they cannot perhaps ship to all their customers sufficient quantities that are in demand. All that results in lower revenue, lower profit margins, and a lower stock price. That's not in question. What is in question is, can this company, which has very positive fundamentals in terms of its profits, in terms of its cash flow, in terms of its management, in terms of its global reach, recover in terms of its stock price? What do I look at in this case? Yes, the price-earnings ratio is very high. It's about 41 on a current basis. Perhaps on a projected basis, it's down around 30. But that's well off its high into the 50s and 60s prior to the collapse. I think in trying to analyze NVDA in terms of its potential for stock price recovery, I think you have to look at its current cash flow, which is very strong, and its projected cash flow. The world will not always be in recession. It will not always have a war. It will not always have conflicts that will rattle stock markets around the world. When you see a recovery, I think you can make the assumption that a company like NVDA, which has something of a strong, very dominant position in semiconductors, in microchips, in artificial intelligence, with all these products going into automobiles, appliances, computers, you name it where it's going, medical technology, that for sure that $168 a share might seem like a bargain in 2-3 years. I can't guarantee it. We're not in the business of forecasting every market rise, every market fall. In terms of fundamentals, which is the basis of good investing, a position in NVDA might, over time, if you're patient and you can weather the downturns that are always in any stock price, find yourself in a more positive position down the road. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.